If you stop to think about it, think of how massively stupid both China and the United States have been to allow the existing tensions to arise. If we two are close, if we make good friends out of the Chinese and vice versa, who in the hell is ever going to bother us?
Charlie Munger, Berkshire Hathaway's vice chairman and Warren Buffett's best pal, has always had a soft spot for China and Chinese stocks. Since 1978, he has had a long-time bullish opinion on China. He even spearheaded Berkshire's investment in BYD, an electric car maker based out of China. While most Wall Street hotshots don't want to take the bet on Chinese stocks, what with the government's regulations and escalating tensions between US and China, Munger called out the two countries and said their feud was massively stupid. Welcome to Wall Street Winners. Let's discuss the meaning behind Munger's jab on US-China relations and why he thinks Chinese stocks are the future. Despite a dismal year that AliBaba had, continued concerns about the stability of the Chinese economy and regulatory risks, Charlie Munger doubled down on his stake in AliBaba in the third quarter of 2021. According to a recent 13F filing, the Munger-led Daily Journal Corporation (DJCO) moved its stake in AliBaba north of 300,000 shares of American depository receipts. Munger's big bet brought his total investment in the stock to well over $50 million. While Munger has a reputation as an incredibly savvy investor who knows exactly what he's doing, this move of his has definitely raised some concerns. AliBaba had a relatively strong performance in the initial stages of the COVID-19 pandemic because Chinese consumers increased their reliance on e-commerce. However, this victory was short-lived as a slew of risks bludgeoned its rally. First, there was a peculiar disappearance of AliBaba's renowned founder, Jack Ma, at the end of 2020. Then, there were threats to the core of the business itself. While Ant Financial's highly anticipated US IPO significantly flared up the company's troubles, Chinese regulators have put an immense amount of pressure on the company. Under the Chinese leader Xi Jinping's new Common Prosperity Initiative, big Chinese giants like Alibaba, Tencent, and Pinduoduo found themselves in regulatory crosshairs more often than not. In an attempt to divert attention from its booming profits, AliBaba committed a $15.5 billion donation to government-funded projects that were aimed at minimizing the wealth gap. So investing in a large e-commerce platform based out of a communist party is quite a shaky proposition. Before 2020, the promise was that China was not truly communist, or at least not as heavily influenced by communist ideology, so as to put a dent in its own growth. Things could also get worse as the slow-rolling real estate crisis sparked by Evergrande has jolted the Chinese economy into a highly uncertain, volatile situation. If you're not familiar with that, the real estate sector accounts for about 25% of China's GDP. In recent years, the sector has plummeted into debt, with housing prices inflating to global highs. This has further affected consumer debts in a manner that resembles the 2008 US housing bubble. Given the combination of these concerns, paired with escalating tensions between the US and China, the impact on the overall Chinese market could be significant. While this scenario justifies the undervaluation of Baba stocks, is Munger getting the bargain he believes he is getting? In March last year, he confidently declared that the Chinese government would allow businesses to flourish in the same way that they had changed communism. He added that what we had now was communism with Chinese characteristics, which implies China has a free market and a bunch of billionaires. He then went on to quote Deng Xiaoping, the former Chinese paramount leader, and praised the transition from Maoist philosophies to the modern Chinese economy. Munger's eagerness to double down on his AliBaba stocks is proof of his steadfast belief in Beijing's motivation. According to a clinical professor at the University of Maryland, David Cass, Munger's conviction is probably rooted in the input of a few trusted advisors like Li Lu, the founder of the Himalaya Capital Management, and others who are well versed with China's tech space. The Chinese government does appear to be easing up on its regulatory rampage as it's turning attention to its problematic real estate issues, which are being amplified by moral hazard concerns. So, a key factor that has so far held the Baba stock back may finally be ceasing. Cass also added that Munger's investment style has always favored a long-term approach. Among Munger's many golden nuggets of investing advice that have been tried and tested by him for more than half a century, patience is a recurring theme. Munger once famously quoted that waiting helps investors, but many people just don't want to do so. He added that if a person didn't have the deferred gratification gene, they had to work hard to overcome it. As for the escalating tensions between the US and China, Munger called the situation massively stupid and urged the two countries to reconcile. His comments came while he was fielding near 2 hours of questions at Daily Journal's annual meeting earlier this year in February. He also called for a ban on cryptocurrency, calling it beneath contempt. He added that the recent deterioration in US-China relations owing to political pressure couldn't be fairly justified by the different systems of government or because one of them did some things better than the other. For context, the trade war between the two countries, started by the Trump administration, is technically on pause. However, the Biden administration has continued to protest China's economic policies that had initially led Trump to begin imposing tariffs on Chinese goods, including steel, computer chips, solar cells, and other domestic industries. This cycle of tariffs and counter-tariffs that first began in 2018 showed how interconnected the economies of the two countries are and also how vulnerable they would remain if either side would take a step further in this cycle. The tariff war prompted Xi Jinping to declare that China's economy needed to be primarily driven by homegrown innovation and domestic demand and secondarily by exports. He called this the dual circulation strategy. While Beijing officials say that this strategy doesn't imply that China will be closing the door to foreign investment and goods, the climate of economic nationalism has already fueled new investments in homegrown brands. Another point of conflict between the two countries is that the US Silicon Valley's internet giants have been shut out of China for years. In October 2021, Microsoft's LinkedIn gave up trying to run its platform under China's censorship requirements. Apple, Tesla, Intel, and Qualcomm, along with several other American tech companies, are still doing big business in China. However, this has alerted the White House, with concerns being raised about Chinese agents siphoning US technology and secrets, cybersecurity, and cyber meddling. In a conference in May 2021, she stated that technology had become the main battleground in the global strategic games. This only led to US agencies scrutinizing Chinese tech investments more closely. Munger's jarring statements and request resolve conflicts are well-founded. For starters, Alibaba has been slowly increasing its dependence on brick-and-mortar stores, international channels, and cross-border trade to boost its revenue to pre-pandemic levels. In the annual meeting, Munger also said that he wished crypto had been banned from the very start. He said he was proud of the fact that he had avoided it and referred to it as some sort of venereal disease. He said that cryptocurrency just floated under a cover of modernity when it was actually useful in tax evasion, kidnappings, and extortions. He also predicted that Apple, Google's parent Alphabet, and Microsoft, all three of which are Berkshire's holdings, will be really strong in the coming 50 years. He admitted that he was incorrect when he thought the same would be the case with newspapers a half-century ago. Munger lamented the displacement of newspapers by the media, which only told people on both sides of the political spectrum only what they wanted to hear. But the highlight of the meeting was his stance on US-China relationships. While he didn't comment on his investments in Alibaba, the stock does seem to be doing well despite all odds. For example, Alibaba has so far reported strong quarterly earnings. Its e-commerce market share is also flourishing despite regulatory backsplash and competition from other key players like JD and PDD. Alibaba is performing well in its newly launched businesses like those in the healthcare and logistics sector. Most importantly, Alibaba's margins in important segments like digital media and cloud infrastructure are improving exponentially. The company also has a significant lead in its membership venture 88VIP, which already has over 35 million members. On the bearish side of things, the present troubles in the Chinese economic ecosystem and the uncertain political environment courtesy of the 2022 Party Congress, where its leader Xi will seek a lifetime term, can undercut otherwise justifiable valuation arguments. In addition, a pivot towards the notion of common prosperity presents significant problems for consumer spending, trends that have so far bolstered Alibaba's prolific rise. In a recent document, Xi wrote that his government would curb the gap between the rich and the poor so that the poor wouldn't get poorer and the rich richer. He added that the country couldn't permit the wealth gap to slowly become an unbridgeable gulf. While Alibaba can possibly expand further into foreign markets, including Africa and the Middle East, wealthy Chinese consumers drive a disproportionate amount of e-commerce spending. This holds especially true for the luxury brands on Alibaba's Tmall online marketplace. At the end of the day, only time will tell us how Alibaba and the Chinese economy will fare amid the trade tensions between US and China. Do you think Charlie Munger is right? How do you think US-China tensions will impact global markets? Comment below. If you liked our video, subscribe to our channel, hit the like button, and turn on the notifications bell.